Hey traders, this is Luke Myers. I want to make a quick video for the day. There's been some great trends in the market the past 2 days. I just want to make a video for today's action, the Friday. After the big sell-off yesterday on Thursday, I was using my 50-200 trading system. And I've been going back and forth between trading more based on price action and trading more based on a fixed rule system. And a couple of weeks back, I traded on price action, and I had some good days, but I also had some bad days. The problem that I was having with the old system, with the price action, was that I don't like getting fake outs. And I noticed that I try to rely on momentum a little bit more, or I try to rely on the first swing principle. But it's really hard for me to see when a trend is a high probability trend is really forming, because with price action you can get signals, and then they have some of the smaller signals have a higher chance of failing. What I like about the 50-by-200 day trading system is that it's very clear. The rules are well defined. Now, under some kind of market conditions, it's going to miss signals. It's not going to catch signals. It might not get as many trades, but when the market really is trending, it's going to perform beautifully. In any system that you use, even if it's a price action based system, sometimes it's going to perform better than other times. All systems, no matter what they are going to have limitations. So as a trader, you have to decide what you're going to do. Are you going to trade with a rules based system based on price action, or based on indicators? Or are you just going to be a discretionary trader and go off of feel? Now that's very hard to do because it brings a lot of variance into the equation. And I have always been an advocate of strict rules-based systems. You follow it, do it the same cookie-cutter way every single time, because that is the only way to get consistency. It's the only way to trade through the bad times in the market as well as catch the good times. Because if you are consistent, you will always catch the good times with your system. And if you're jumping around and you're kind of, oh, I'm going to do it this way this time, I'm going to do it this way this time, and you're always changing different types of little rules and little techniques, you're never going to be able to have the consistency, because what will usually happen is it's never going to work out perfect. You're never going to be perfect during the bad times and perfect during the good times. It's always going to be unbalanced. Sometimes you'll be good, sometimes you'll be bad. During the good times, you might not catch all the things. During the bad times, you might catch a lot of the good ones or the bad ones. It's hard to be consistent. So anyway, on my system here, you can see today's trading. We had our first swing. I got in here. Now my rule is if we're pretty close to this red line, this 200 EMA, I'm conservative with my entry. So I'll usually put my entry point just a little bit back a little bit. It didn't go for my 3-point target, so I actually got out here with a very small win. Got in here for 3 points, did the same thing, had my conservative entry. If I entered right at the blue line, I actually would have been stopped out, so that was a good move on my part. And that actually does happen quite a bit. Went in for a second trade here because it was a full, real clear cross. There was a little bit of a divergence that was kind of marginal, but it was the only loss on the day. It broke up, but I didn't go long because there was no clear signal break here. It fell down again with the trend, and I took the first swing pullback with the trend. This is a cross right here, signaling a continuation of the trend. I took that. It went down again, but there was a divergence, so I didn't take this second trade. Same pattern repeated. It didn't fail to break out. Broke to new lows. I looked to see if there was any divergence. Momentum was down and strong, so I took this trade. Another 3-point winner. Then we broke down even lower, but there was no new breakdown in momentum. It rose up, failed to start a new trend, as you can see here. Broke down again, and I took the first swing pullback, and that worked out for 3 points. Didn't take this one because there was a divergence. What my rule is I usually try to take the first swing touch of a new trend. That's when these two cross. for the first swing touch outside that cross, I will generally always take that. No thinking about anything about divergence or anything. I just take it because I know that that's a probability, a winning probability. If it pulls further down, I'll only take it if there's no divergence present. The second swing is generally a lower probability. The only time it is probability enough for me to want to take it is if there's no divergence. So that's my rule. I don't look at divergence for the first swing. I always take the first swing of a new trend, and then second swing, I'm looking more for divergence. Anyway, you can see we did further break down here, but momentum wasn't within my rules. It goes flat, and then now it looks like we're about to break up. Anyway, it was a great day, 12-point potential. I didn't actually trade all of these. I traded about half of them because I started a little bit late. But still finally made some good money, profitable for the week. Very happy. And I'm also very happy because I've finally kind of cleared up some of the issues I was working with my own self in my trading on some of my systems, going back and forth on which ones I want to do. So again, consistency is the key, everybody, and have a great weekend.